Good morning, everybody. Thanks so much for joining us today. My name is Kobe Rex. I'm a loan officer. So, we are going to be doing a presentation on divorce lending. We're calling it the Festival of Broken Promises Revisited. We did a training at the beginning of December where we went over this as well. What I like doing is twice a month, I do trainings. I do one training per month on self employed borrowers and then one training per month on divorce. I really like being in both of these niches because it is a little bit more technical. And I'm licensed in 50 states. So a lot of these situations with both self employed and especially divorce, many of them are coming across state lines. And that's kind of one of the things that I've been proud to do with this 50 state license is that I don't have to hand it off to another person. I can keep everything simple in house. And so what we're going to do today real quick. So my training manager, Tammy, has created a presentation that I'm going to let her get into. But for a little bit of context before I hand over the floor, what this presentation we're going to talk about is if you do not get things set up correctly, this specific example haunted my borrower for 9 years. He got divorced in 2016. He did not get it done completely correctly. And we were past pre approval in the late stages of underwriting. And what ended up happening was that a judgment from a credit card that him and his ex wife did not properly take care of became the linchpin that actually caused this contract to fall apart. So, a lot of times, people, and what I like about this example is many times in divorce, people start out by saying, oh, it's amicable, it's amicable. Whereas this one actually wasn't amicable. Basically, this guy was trying to end the specific circumstance so that way it just get done and didn't properly document it. And now, 9 years later, we had to terminate a contract because someone didn't do their due diligence up front. So, what I'm really excited about is Tammy has both a presentation and she's actually also made a worksheet that if any of your borrowers are actually going through the process of getting pre-approved or going through the process of getting a divorce, it is a super helpful tool that they can use as a checklist in order to have a more elevated conversation to nip some of these things in the bud before we even get started. So Tammy, I am going to share slides real quick.
Yeah.
So can you see the slides, Tammy?
Yes.
Okay,
Yep.
perfect. Well, take it away.
Okay. So welcome. It's nice to see you all today. We're going to be talking today and focusing on, the credit rating and some impacts. And like Kobe set up as the case study, he's going to talk a little bit more about as we go through. But we really try and focus on how those of us who are not primarily involved in this kind of proceeding, a divorce, that decree really makes a difference and it impacts our clients. It impacts them potentially for a very long time. So we're trying to educate people who come in contact with, folks that are going through this. If they haven't done some of these things, and this is Kobe alluded to the tool we have that will show you, um, the if they don't deal with it, or even if they're done, but maybe it's not too far along, they can make some changes before it causes them to lose a sale of a home or loses buying a home post divorce or post decree finalization. So if you would, Kobe, let's head on into the next thing. So we're really going to focus on risk mitigation. We talk about that. And each time we do one of these presentations, we have a different type of case study to talk about. So it's worthwhile looking at the past ones we did because we do focus on a slightly different aspect each time. But if you have unlisted debt, the legacy impact of that is sometimes really huge. Unclear ownership of who's going to own debt, and if you hear your clients talking about as they're going through, and when you're showing homes and stuff, you get stories, oh, we've got to do this really fast, or I have to make sure that my ex-husband or soon to be ex is doing X or Y or Z. So you kind of get a picture and a line into that window of what's going on with your clients. So you can help them make it a little bit less, hopefully, a little bit less stressful as we go through here. So go ahead and go. So, case study. Divorce was final in 2016. The lending client, they thought everything was going okay, but what they, and so he proceeded, his life proceeded. And in 2025, he's going through the new home purchasing situation. It's been a long time. He's not even thinking, that far back. But they found on that credit, as it's going through, they did the pre-approvals, but as going through underwriting, $12,000 judgment on the credit. Yeah. And he had no clue. Just what runs through my head is number one, he should have checked his credit kind of along the way. But anywho, you know, the
Well,
credit
it's just
card.
hard because like I
Yeah.
issued like I just want to like clarify this for a lot of people. Like when you're having somebody go through the pre-approval process, we're not actually going to take them into underwriting. And
Mhm,
so with this specific case, everything looked clear. I mean, honestly,
mhm.
his income was a little wonky because it was self-employed. But then what ended up happening was that we go into underwriting and all of a sudden it became a huge issue. Luckily, we were able to get earnest money back, but a lot of other states, I know you have to ratify, like, there's no guarantee you're getting that money back. So, really, if somebody's going through this process with habit, let me give me 1 second. Let me mute that. But what I feel is that it's just important to, if someone's going through a divorce, going through we call it a TBD underwrite. So we don't even have to go under contract to actually take it all the way into underwriting. And that
Mhm.
could have been when you have someone that is in a divorce situation, I would highly recommend them actually taking it all the way through that higher level of scrutiny because typically we had to go multiple days for him to remember where this judgment was from. I was looking in county records and we finally figured it out. But truly, it's so much better to get more thorough with your pre-approval TBD underwrite if you are especially in a difficult situation like a divorce situation.
So what they should do, you get your pre-approval, your client has the divorce situation, either a recent one or has gone through one that you're thinking, something's, potentially this TBD that he is talking about, um, potentially you don't have a contract on a home yet, but you just kind of know, oh, maybe we should do that. So you contact Kobe and say, let's just check this and make sure nothing's hiding in the wings so that we can deal with it sooner than later. And you recommend that to your client that they get with him. And, in this case, the guy was self-employed as well. So there's always some interesting things about proving financial soundness with self-employed folks. But even if you don't have the mix of those two going on, getting in touch sooner rather than later, he could give you some, steps to take so that you're sound by the time that you get to a point where there is a contract where you want to take action, that that all parties can move forward. So the fix to this is, yes, the divorce decree should list all debt, and the final resolution needs to have completion dates. So, and that's I think our first session on this listed, some things about the actual divorce decree that we recommend in allocating debt and everything, not being just blasé about it, but really encouraging clients, yes, be upfront, don't do anything under the table, don't just say, oh, we're going to do this side agreement. It potentially will come back to haunt one party or the other later. And in this case, 9 years later, he's got this hanging out. So I say we do have this tool, a checklist. You can provide that to your clients and just say, you may not have any issues whatsoever, but please take a look at this because we have somebody that, a lending contact that can walk you through some of these things. So we just be sure everything is good to go by the time we get to some of those final dates.
And it's nice. I mean, it was so great in the lead up to this. In the green room, Eduardo was talking about how he had 7 offers on his property, and the winning offer ended up being with an escalation clause and an appraisal gap. But for a lot of these situations, we're not in a 2021 market where people are super afraid that they're not going to be under a contract if they don't just rush into the first contract they see. So luckily in this market, with it being more of a professional, more neutral slash buyer's market, you do have a little bit more time to go through this instead of feeling like as much of a rush as you did in prior markets.
Yeah. So you can go to the next one. So this is just outlining some of the things we do when we know about a divorce situation and looking at what's going on with folks. If we're involved early enough, I should say, we actually like, if the people are comfortable with it, providing us the sections out of their divorce decree that deal with the real property and the debt to income allocation, because it helps us highlight any of these types of things, or just in the conversation with a client, you can find out often if they have done some of these sidebar agreements, or, in the case of the case study here, they had a credit card that was going to be dealt with outside of the decree, unofficial agreement, just a bad idea. That there may have been a really good reason at the time that both parties thought, but bad idea, because there's no leverage to ensure that the contractual agreements are kept. Unless it's in that
And I think
decree, it can't be acted on.
And that is the other thing too that we've just seen, is that a lot of times your clients are going to be in the middle of a situation where they don't even have the full decree. I unfortunately had a situation where I had an individual who thought he was going to be refinancing his property to pull out equity to buy out his ex-wife. But then all of a sudden, he calls me in a panic because the court has now awarded the house to the ex-wife, and now we're now in a scramble because we're having to now use a very heavy down payment assistance program because he's in a rush having to buy a house. So I would just advise your clients, especially that are in the process and haven't finalized their divorce yet, that we're open to consulting and walking through these different situations, but going under contract or having full discussions about what we're doing without a finalized decree is not in alignment with what is probably going to be reality in a later down the line.
Mm-hmm. Yeah. And this is another tool that we have. Kobe has the links to the documents, and I do too, for the post-divorce housing plan. I know it sounds all grand and everything, but basically it just takes folks through kind of questions and things that, what do you plan on doing? If you plan on doing this, well, okay, let's make sure that everything is listed. Let's make sure you've been assured and you have it in writing, because again, it's a contract. I know there's a lot of emotion around divorce and everything, but ultimately the reason that you're going to the court and going through all of that stuff is it's a contract. I've done contracting for over 30 years, and if it's not in a contract, it's likely not going to happen, or it's not enforceable. And in this case, you want to be sure all that debt and allocation, that it's listed, it has who's going to own it, who's responsible, and what date they have to either make changes to it or get it in their own name, or make sure that the other party has done what they're supposed to do. Having those finish dates in there is just highly, highly, highly recommended and super important. Otherwise, you get to the point where you've got a contract and people lose their down, the earnest money and things like that, because they're just not prepared to and able to go through those final steps.
And it was interesting because this week I went to an event where I actually met with judges from a county here in Colorado, and it, it's having the enforceability of having the ability to say that the other party is in contempt of court by not following through is your only real enforceability.
$4 aren't going to be worth it. Whoops.
Let me mute this real quick.
Oh,
So basically, I would just highly advise that it is funny because I was talking to someone that talks about some people get afraid of the court process,
mm-hmm.
don't like having to make it so official. but using that as leverage in order to make sure that you have a clean post divorce housing outcome is huge.
Mhm. Yep. Getting to that point and being able to solve that, and then not having something pop up 9 years later, 10 years later, when you're doing other real estate activities. We know there's lots of other things involved in this, but just from, this perspective is what we wanted to focus on today. And we'll go to the next one. I think yeah, we're getting better about our time here.
We are. We didn't really ramble as much today, but I just wanted to go through our last two ones we did before this and kind of hit some of the highlights.
Yeah.
So the first issue that we had with one of my files was that I had someone that was under contract to buy a house in Colorado, but had an investment property in Alabama that they just kept telling me, "Oh, well, I got a boy down there that'll take care of it." Ultimately, they also did the mistake of going under contract without having a finalized divorce decree. And in that training, we talked about how there were clauses within that divorce decree wanting property to be sold or rectified within days of the decree being finalized.
Yeah.
So that was a huge one for us was number one. That's why I love being licensed in all 50 states is because you don't when you have all of your ducks with the same person, especially in a complicated situation, it is so much more powerful than the on the house in Alabama, the appraisal came in low. So he all of a sudden was going to be required to bring 18,000 to the table. They were trying to run around getting an emergency injunction to remove that requirement from the divorce decree that was just finalized and move it into the wife's name. And this was all like 1:30 in the morning as they're telling me that the ex-wife is not going to do this. So that was one truly where make sure you have it's called the property and financial section of the divorce decree. That is truly where every time you go through a divorce and you're doing lending situations, you will have to provide that to us. So I know we've talked about in the past. If you haven't ever looked at a divorce decree, I would highly suggest possibly getting familiar with it. Um, but then the other one yeah, that was the other big training. Tamir, can you think of what was the other um, big one that we talked about in a previous training?
Yeah, we had where, I mean, the big things we hit are be honest and have that divorce decree and, you know, look at the real property sections, make sure you know what's going on, have deadlines in there that are realistic, not within, you know, a couple of days of when something's going to get finalized. That can always cause problems with all kinds of things. And the clients end up back in court, and that's not good. The last time we went over
I
was,
do remember one specific.
yeah,
So there was one that I remembered was I was helping a lady that was so she had been divorced for nearly 2 years, and the divorce decree required things to be settled within 2 years.
right.
And the issue was that on her credit, the divorce was supposed to award the debt for the ex-husband's car to
Right.
him and separate it. But the issue was it showed up on her credit, and because he was paying for that car in a joint account, they could not exclude that from the debt ratio. So we had to go through a whole operation to reorient this whole file to
Mhm.
make sure that we could qualify within ratios. They actually had to have a co-signer, and that co-signer we had to pay off a mortgage in order to qualify. So it truly is so the quicker that you can, if somebody you know is about to go through a divorce or you have a client that is going through a divorce, and even if the deadlines are a year or two in advance, have they been able to say, hey, I need you to make sure that you're making the car payment in an account that's not joint, then we could have, the loan was supposed to have been for like 330,000 and we had to go all the way up to 450,000 because of that. So it was a huge difference that I feel like a lot of people are kind of ashamed when they're going through this divorce situation, but that's what I like about being in a room with so many realtors is I highly rely on your collaboration in this process because a lot of the conversations that are going to be super emotional, I'm going to defer to you to help with that because I am mostly looking at numbers and I'm expecting that the relationships that you have with your clients, we're going to have to work together as a team of professionals in order to get things figured out. And it was funny too, because that one that was the 450,000 one, the other issue was they didn't even do the quit claim deed right on the initial transaction. So they hadn't shifted ownership, and we were having to rush through the day of closing, finding a way to get title, to get the ex-husband to cooperate, to sign a document, to sign himself off of title. That all of it's it's so amazing how much shame a lot of these clients have dealing with these situations because they just wanted it to be done. But
Mhm.
ultimately, that's kind of our biggest thing in lending is we're not going to allow funds to be dispersed until you have all your T's crossed and I's dotted. And the more we can hit that up front, the more smooth the transaction will be.
Right. And that's actually where it comes in with being able to have somebody look at their financials, do the pre-approval, fantastic. But then, if there is that circumstance going on where there's been a divorce, you might want to contact Kobe and have him do that TBD, evaluation of what's going on so that what the picture is and you won't be running around at the last moment trying to figure out, oh, who has what title and did it go through correctly and stuff, because that would be found in a more detailed review of the financials earlier than, when they go into underwriting, do a pre-review basically and make use of that. And I think those are the big things we've covered so far in our various webinars.
Cool. Well, I'm going
Yep.
to open it up to questions. So, does anybody have any thoughts or questions that they would like to kick us off?
Or we did such a great job, but
Okay, so question. Um, does this mean that if we've got clients moving out of states or moving from another state into Colorado, we should have title pull information on the marital property or properties that they
Correct.
hold to make sure that there's no liens or anything on those?
Well, exactly. That's what. So the file that I was closing that is in this case study, they were trying to close on a property in Florida, and the judgment was in Tennessee. So it was completely in another state, and that's why I would. You can either have title run that, or in a TBD underwrite. When I send it up to underwriting, they will do a more thorough search. We don't have to rely on title, but I would highly suggest that if title can do a records check, because it wasn't even attached to a property, it was literally just a county record within, what was it? I think it wasn't Franklin County because that's Nashville, but it was in a county within Tennessee that we had to go through, look at that. And yes, definitely, this isn't, you can't hide it from being in a different state.
And Kobe, some of those things, in other states, they're not a disclosure state and attorneys handle the title. So it's even more difficult from our end occasionally to be able to find that information. So that TBD would be beneficial from that standpoint. Um, do you find that you're seeing less issues when you're handling the multiple state type of transactions where, people are selling in one state, buying in another, or have properties in other states because you have the licensing in all the states?
It really does. It is such a hard thing sometimes to unhook. Like that one client I had that had the house in Alabama and was buying in Colorado. Unfortunately, there are a lot of buyers that luckily had a good lending experience with someone in the past when it was simple because it was a VA loan. That all of a sudden, when they're going to an investment property with a divorce decree, that those those timelines and those, just because of the fact that it was really good to have the specific person for one transaction in time, having someone looking at the whole picture, because I have to balance debt ratios. If we're going to be refinancing a house, I need to see how we're going to exclude that, or what can we do? And that is the power of having all of these property mortgages that you might be doing simultaneously in one person's hands, because we can, like, if we need to stack them where you are refinancing out of something that I need to exclude, I'm going to eventually need that closing disclosure. So being able to have it where I know the timing versus, it was wild on that one for the had the Alabama property, because we were literally going under contract and they're like, well, what happens if we have to continue to extend the divorce decree? I'm like, wait, you just went under contract where you are telling your realtor that you're going to have to extend 45 days, possibly, which we had to do. It's, it truly is a different type of lending in a divorce situation where having one person, I expect multiple states. I expect to be looking at those things, and it's nice to have that all in house. So thank you for that question, Shay.
Thank you. I really appreciate that.
For sure. Any other thoughts? Any other questions?
Okay, I have one. So, I mean, this situation, they ended up selling the house before they got divorced, specifically just because situation they didn't want to go into foreclosure.
Mm-hmm.
So they, the home of the sale happened before the divorce. That's fine. But the situation that I was curious about is during the process, the spouse, one of the spouses was actually overseas, and we were trying to establish, and inaccessible at some point. And I was like, okay, with him being in the military, they, I guess they had a power of attorney who was his mother, so we were able to use that to, sell the property. But my question is, would a power of attorney be able to also, I guess, answer to the consolidated debt too? Like if it came down to like a divorce decree and a house is involved and all these credit cards and debt or whatever, would a power of attorney be able to answer for the spouse in that situation?
So I am I am not an attorney.
Okay.
So I'm gonna start with that before I start
Yeah.
completely talking about that. But I will say in many situations, I have seen powers of attorney being used in order to answer for things, especially like you said, with someone that is deployed in a position where I would just always having a real estate attorney on speed dial to answer those questions thoroughly. But in many situations, I do not foresee, as long as the power of attorney has been written correctly and is enforceable, that yes, we understand that there will be specific situations where some designated representative can help to collaborate in these discussions.
And that would be, it really is. And I saw someone put in the comments there. It depends on the verbiage in the POA. Completely true. Because there's a variety of power of attorneys and they can go to a point and no further, or they cover everything. It really depends on how long the verbiage usually depends on how long that individual has been deployed or is unavailable. The longer they're unavailable or the more often they're unavailable, then the POAs tend to be more broad scoped and include things like their, what to do with their debt and all that kind of stuff. Sometimes they'll actually list if the divorce is recent enough or happening, they'll list those kinds of activities in there. But it really is, again, dealing with contracts. So what does the contract say, and what are the authorities listed in that power of attorney? So, yeah, and each one's slightly different. So,
Anna, does that answer your question?
Yeah, absolutely.
okay.
Well, thank you. That's a really good
Yeah.
one because I know, especially in Colorado, we have many military members. So
Mhm.
very thoughtful. Jody, I saw you commented. So I know that you deal a lot in estate and other difficult situations. Do you have any thoughts that you would like to share with the group on anything that's been presented?
Not necessarily, but just generally speaking, in every special situation, estates, divorce, anything that is some sort of legal, and they have additional documentation, even the power of attorney. I'm in a state where I don't use a title company, I use, my attorney. And I would automatically say, if I have a question, I'm going to definitely reach out to them because they are the source, especially when it comes to legal documentation. But like I tell my estate sellers, we're doing very little with a property that they have inherited until they have their articles, their articles of assignment, assigning them as the estate holder and the executor. So it just, if you're going to handle any of those, fine, contact your attorney and make sure you have all the right documentation. I mean, you could even reach out to somebody like me who this is my niche. I'm pretty knowledgeable in that. If you can't reach an attorney or something like that, if you had a specific question. But anytime you're dealing with an additional piece of documentation because it's a special circumstance, you definitely want to consult the expert in that field, which for us is most likely an attorney.
I really appreciate that. Thank you for the insight. So I would invite anybody that would like to. We've been doing this now in the last few presentations. If anybody would like to share your contact information in the chat, we can actually put together a document because I know we have people from all over the country in this room. I see some because Jody is out of Savannah, Georgia. We've got Shay in Denver. I know we've got another realtor I'm seeing in Arizona. So a lot of it, we do like using these as a way to kind of build your network as well, to have the ability to, if you have a client in another state, which many of these situations do, I know everybody has their different places where they like to drive referrals, but we also are, I appreciate many of you taking the time on a Friday to talk about something that is not necessarily the most glamorous thing, but can be really helpful for your clients to take care of in difficult situation that many of us are finding now. Does anybody else have any other questions?
I have a quick question. Have you, Kobe, ever experienced where you're, in the middle of a transaction and let's say, everything is going great and one of the parties passes away suddenly?
Oh,
So I can say I've not had that happen yet. So have you had that happen recently?
I have not, but there's another individual that was in the process of purchasing a property and her significant other passed away.
Mhm.
And so she ended up backing out of contract and the her agent sued her for commissions owed.
Wow.
So
wow.
Elizabeth, on that, it depends on how the title is held. So if, like here in Colorado, if they had a joint tenancy, with right of survivorship, she could have proceeded. And I am familiar with court cases where the broker has won in that case. Uh, if it's where it's like here tenants in common and the breakout is different depending on if there's a will or not. So it just depends uh on a number of things.
And Liz is in California.
Awesome.
So
And one other aspect of that, because I've dealt with it in a commercial sense when we were dealing with a commercial property and a lease, and one of the owners passed away. And we really had to dig into the ownership agreement. So in the case of residential, like Shay said, how is it held? And then two, a person is like, I'm overwhelmed. I can't go through with this. The advice might be, instead of just closing everything down, do we want to talk maybe about an extension so that you have time to like breathe for a second, especially unexpected, right? And in our case, I had two different properties doing two different things. One was the person wanted to quit doing anything because unexpected pass away. The other one was they wanted to proceed. And it turned out that what they wanted to do, we were able to extend the one because the ownership of the property was such that that person could make that sense. And all the parties decided it was okay to extend, a closing to further out to allow the legal documents to catch up, basically. And then in the case where the legal documents were not clear, we had to go to court basically and say, here's our circumstance, and the court had to make an interim decision about the property and what we could do. So again, contractually, look at what's written in those contracts. So
Interesting. Chris, do you want to unmute and talk about your question specifically?
No, I was just curious. I was just curious more about that situation where an agent would ask for their compensation to be paid on a property that didn't go through the transaction in a situation of a death. I can't even imagine doing that to a client. So I was that just really piqued my curiosity. I've asked for reimbursement for funds, expensed, but I'm just surprised. So in this case, she was distraught and she did ask her agent if she could just have a little bit more time to figure out her finances because, the income was coming from the husband's side. And it came down to it where she just didn't, parties didn't want to extend it, didn't want to give her that time. So she ended up going to court and she did. She was in contract, so yes, she did violate that. What do you call it? I'm blanking this morning. So she did owe commissions, but it was like $38,000 and they got it down to 7,000. But here's where, it kind of gets interesting because yes, the agent was right that in the sense that she had the right to go after for commissions owed, but would you have done that because now this agent is her clients are canceling with her.
Yeah, it's an ethical issue. I mean, I can't even imagine asking that of someone if you're in the slightest bit compassionate. All of the brokerages I've belonged to have required that we do ninja training, and that goes against everything that anyone would even learn in humanity, for humanity's sake.
Well, the agent right now, I'm like, she had to shut everything down. She is a very big agent and has a huge team. And all of her agents are getting, yeah.
And I would think they would be blacklisted. It's just not how you do business with people,
Well,
This
and
is
I just
really
wanted to, and one thing you can do too is I don't know if the this would matter, but leaning on the lender to provide that that lending contingency as well, and leaning on the lending side, because if for some reason the income changed, if the lending contingency had not been passed, that is another thing that I would recommend looking at potentially as well.
She bought new construction. She went with the lender.
Oh, so fun. Well, she needs to call me the next time, and we'll have a bulletproof. Awesome. Great question, Liz. Love that. Thank you for the feedback, Chris. Okay. Anybody else? This has been a very thoughtful discussion today. I'm excited because we need to get, Shay keeps asking me to do one, and I definitely will need Jody on this one too, is I think we need to talk about doing an estate training and offering a more thorough discussion on that as well, because like you said, they're not fun things to discuss, but these are real issues. And especially when we're seeing the average homeowner age increase so dramatically, these are going to be more and more common discussions.
And we've heard that even just the high points of touching on the actual case studies, what has actually happened on something, has been very helpful to prior folks on our recordings and things. So if you have a circumstance and situation that you talk to Kobe about and get into the details with, he's experienced a lot of things being licensed throughout the country, but it is worth kind of digging into, because hopefully we can help educate everybody and kind of like get in front of more of the risks associated with this than trying to play catch up in the end. So thank you guys all for your time today. Appreciate it.
Well, great. Well, I'll let everybody, I'm going to keep the room open for another like 3 minutes so that way, if anybody wants to copy the chat, so that way, if you have someone in there that you'd like to reach out to, I invite you to download that. We are going to be doing a training in another 2 weeks on we're going to be doing a self-employed training. So I would love to see many of you on for that. And I really feel like we're going to just keep alternating. My plan is every 2 weeks to be doing a new training. So if you have any topic ideas that you would like to have me, and I can even get more guest speakers to bring in, because I don't want to seem like I do have some experience, but what I'm hoping that many of you have seen in this room, there's a lot of us that if we collaborate on these experiences, we can just really be of benefit to each other and then also to our brokerages. So I am going to plan on closing this in like 30 seconds. So if you are waiting to get the chat, then I invite you to do that real quick and benefit with.
I had a quick question
Yes.
pertaining to your mortgage company. Do you guys have a program, for example, let's say you've got a client that's needing to sell and use
Mhm.
the proceeds in order to buy their up leg, or let's say that they want to do a 1031 exchange, but they don't want to do a reverse because it's going to cost more money. Do you
Mhm.
guys have a program where you can get their up leg, hold on to it for them, and then they can move into that and get pre-approved and do all that with you? So that allows their departing residents to have no contingent upon, seller finding replacement property or anything like that.
So that would typically be what's called a bridge loan. So there are ways to do that. So bridge loans are definitely a great tool in this specific situation where typically there has to be substantial equity, but really it becomes this vehicle that allows them, yes, to make non contingent offers. And then ultimately, once the situation is rectified on the back end, then we look at the exit plan and are able to rectify and pay off the loan that basically is the big bridge when we have the exit plan.
That's not a bridge loan.
So what's the question you're asking then specifically?
So I heard that there's a program where basically the lender will purchase the property outright, the upleg cash, hold on to
Mm-hmm.
it for them, and maybe, there's going to be a cost associated to both, but
Mm-hmm.
will basically for like the overall PITI, whatever the borrower's approved for in order to purchase that home, that's what they would pay to you monthly. And then they can sell their departing residents free and clear.
So as you just saw from my last response, that's not a type of transaction I've done at this point. I can definitely get some more information and try to see if you have like a specific link or something that I can look at and get you more information on that. I have not personally done with that specific situation. Perfect. Thank you for the great question. Any other thoughts? Any other questions? Okay, perfect. Well, always appreciate people coming and spending their Friday with us. Would love to see you guys again in 2 weeks. If you would like the recording, I know I have the chat for a lot of people that are looking at it. So if they specifically requested it, I will definitely make sure they have it. And you can always find me on LinkedIn, and would love to have the opportunity to work together. And until next time, hope you guys have a great weekend. See ya.